There we go. Now something is coming through. Yep.
Okay, we got you, David. All right. So Steve wants to know how you believe the Fed could rescue this thing.
Okay, we're jumping ahead a few pages,
okay.
But let me just put this up behind. So it's background to what I'm about to say. So, from my perspective, the Fed, this entire rally since not just 2018, since 2009, has all been driven by artificial stimulus. And I would actually counter, and sorry, Steve, I missed your comments at the tail end of your presentation a little earlier, where you said you differ with me. The Zoom was loading, and it just cut you off for that like 10 seconds.
Yeah, I said that we're thinking in the same type of manner. We both believe in Austrian economics, more or less, and sound money. And I'm 100% in the same school of thought as you are. Our only difference in assessing the current situation is that I'm now giving, especially ahead of the US elections, a decent chance that this might be the prick that, burst the bubble, while you're still quite optimistic that they can reinflate it for one last time. And I'm asking, what makes you think that? I'm not saying that it can't be the case. It can, but I see you're quite confident about it, and I want to know, because I respect your way of thinking and your analysis. I want to know, what makes you think that they can manage to do it.
Well, it's again, as I was just saying, thanks for giving me that quick update. So if you look back, going back to 2018, I think we'll agree on that, and perhaps we could have more of a debate since 2009. But certainly, from my perspective, this entire rally has been driven by the Fed and other central banks to more or less a similar extent. And the latest drop is just further confirmation of that, because the FOMC minutes came out on February 19th, and they stated that valuations were elevated and we're planning to taper repo interventions in May. And that alone, and then subsequently the stock market drops. Now, compare that to the cover story, I'll call it, that the coronavirus is responsible for this. The coronavirus has been around for a couple of months now. Some would argue as early as November. But the number of infections, the number of deaths has been climbing steadily, and there's debate over whether the numbers are correct or not. But this is my point. Did suddenly everybody wake up on February 19 and decide that coronavirus was all that mattered? You just suddenly your alarm clock went off, and you said, "Oh, the world's going to end coronavirus."
The excuse for everything, right, bro?
Yeah, I don't buy that argument. Whereas, on the other hand, you had the FOMC minutes come out where the Fed says, hey, I know we had your back before, and that's why markets have been climbing ever since December 24th of 2018, but now not so much anymore. We're going to taper our liquidity injections into the market. Now, if you are like me and you believe that liquidity is all that's been driving this market, and then on Feb 19 they come out and say, hey, we're pulling some of that back, like any Ponzi scheme, and I will say Ponzi scheme, when no cash flows into that Ponzi scheme either stabilize or fall, even worse, fall, what happens to the Ponzi scheme? It collapses.
Yeah. Done.
It implodes. Collapses. Yes. So the Fed was essentially saying, we're printing money beyond belief and injecting that into the repo market, increasing our excess reserves on balance sheet again, to ensure that we retain control over the short-term rates, etc. But now we're going to ease off on the gas pedal. And what happens? The stock market dumps. That is the reason for me. That's the trigger. That's the catalyst. We can debate the background. We can debate the fundamentalism, coronavirus included. I'm not belittling it. It could be, Armageddon financially and socially. But
it definitely will affect the economy. I mean, we have so few incidents here in Greece. And yesterday, as I said before, I went in one of the biggest malls here, and it was empty.
Yeah, but I will also cite yesterday somebody was flying out of LaGuardia Airport, and you saw like 2 people wearing masks. Nobody else was wearing masks. So
from those that actually went to the airport, though, you have to take that into account.
Yeah, there were only 3 people there. Yeah. No, but again, to follow on your point, Steve, it's a good point. But since when has the economy and the stock market been connected?
Oh, not lately for sure.
I would argue since 2009. I mean, this market has been doing its own thing. And that's what my comments are focused on the market. I agree completely with you in regard to the economy. But I like citing a tweet, I think it was QTR posted about a month ago, basically saying that, you know, the mankind has come to an end due to the coronavirus, but there's a printing machine in the basement.
Yeah, there's an algo, he said, at the basement, still beating up the S&P. Yeah, I saw that. It was hilarious.
The Dow's hitting new all-time highs. But,
yeah.
But
David, why would the Fed, you know, most Ponzi schemes don't end intentionally. They end because they can't find any more bag holders. So why would the Fed intentionally sabotage their own Ponzi scheme again?
Well, first of all, I don't think they've intentionally sabotaged it, maybe in the short term. But this is where it goes to Steve's earlier point, you know, about my optimism.
They'll be back singing Kumbaya with Yellen and Bernanke again.
Yeah, let me paint a scenario, because I hear this a lot, especially on Twitter, about like the Fed can't let this go much further. They won't be able to bring it back. I disagree, strongly disagree. Let's look at this for a second. Look at Tesla. Just use Tesla as an example. Their stock price just shot through the roof recently, and one of the principal reasons for that was the short squeeze. People were massively short Tesla, and they got squeezed to high noon. You saw that methodology used in the stock market by the Fed and other actors to pump the prices higher, basically squeeze the shorts out, and they've become very effective at it. Let me ask you, do you not think that if this market drops down to my primary target of 2,600, or even to my original target, which you may remember, Dale, which is back down to 2,100,
that's the megaphone line.
Yes. Imagine we fall all the way down to 2,100. Mm-hmm. The sellers may or may not be exhausted, but imagine how many shorts there are out there. And then the Fed, agrees to QE, bring back full-blown QE, potentially MMT, which they've said is nonsense, but in a crisis and under political pressure, they agree to do that. And then they also enact new measures such as buying equities. While the market is record short, you don't think we could see the most historic short squeeze you've ever seen?
From 2,100 to 4,200.
Yes. Okay. I mean, you squeeze the shorts, it gets you to 3,000.
I'm 100% with you, with one little objection. Don't you think that under the current circumstances, which is with the U.S. elections coming close, even a drop even to your first target that you mentioned should start hurting Trump's chances of getting reelected, and wouldn't that by default force the market to start pricing in a president that is a lot less friendly about, about the stock market, like, Bernie Sanders? I mean,
but by then it could be sell the rumor by the fact if Sanders won.
And this is the other thing with regard to Sanders. Yes, and this is another thing with regard to Sanders and the socialists. Look, these are the guys that are pounding the table for MMT.
Oh, and absolutely.
If you start flooding the economy with money and start sending checks in the mail to everybody, on top of that, you're buying every asset out there, student debt, you name it. On top of that, equities. I would actually expect the market to go roaring higher, at least in the short term.
Might be the case, but not in dollar terms anymore. You know what I mean, David?
Not in real terms.
Yeah, if that was the case, I would expect the dollar to start a massive move lower.
Yes. We're on the same page. That's the way the end game plays out, in my opinion. It's basically hyperinflation. By doing this, of course, it's all nonsense. You're going to print the dollar into oblivion. But what else? What other choice do they have at this point? And we've been talking about this for quite some time. U.S. unfunded liabilities are coming due this year in a big way. And they're already massively indebted. Deficits are over $1 trillion per year. And you've got Lagarde calling for fiscal stimulus in Europe. You're going to expect the same in the US from the left in particular. I mean, it's just going to get worse. How are you going to pay for all this? Well, hello, Fed. That's what they're there for. We're just going to go down to our printing press in the basement, and we're going to buy another printing press beside it, and then we'll buy 4 more. It's Weimar Germany all over again.
As I've said, there are 2 ways. The honest way, which we know that today's politicians would never follow, which would be, you know, tell everybody, listen, we made a big mistake. We have to, you know, to have a huge haircut, but at least, you know, we're going to sustain, you know, the purchasing power of the currency. And the dishonest way, which most probably politicians are going to follow, which is massive devaluation of the currency, so you actually pay what you promised you would pay, but you know, it's not worth anything anymore.
There you go. I can't see Trump going for the former, and I'm with Jeff Gundlach. I believe the US is behaving fiscally more like Argentina than Japan. So I'm in the camp where they are going to print the dollar into oblivion. That's the sacrificial lamb to keep bond yields down and to pump the stock market.
That would, though, also mean an abrupt end to its status as world's reserve currency, right?
Oh, this is the end game we're talking about, yes.
Yeah, because, I mean, who's going to accept it anymore as world's reserve currency if it, you know, if it starts, you know, dropping like a stone?
Yeah, I mean, you're talking about global monetary reset.
Yeah, of course.
You're talking about new global currency, but again, that's where I believe this is all going. Is that we're going to get a digital SDR or some other supranational currency that basically becomes the new global reserve currency. And in order for that to happen, the dollar has to be sacrificed.
Yeah, it is a very likely scenario.
Yeah, so go ahead, David.
No, I was just wondering, is there any, I know your, you know, metals will do very well in an environment like that. Is there any fiat that will do well? Will the euro and the Aussie, just for fiat trades, be the beneficiary of this dollar collapse?
The gold-backed ones will be.
Okay.
You know, Chinese yuan and the Russian ruble are looking extremely attractive these days.
Okay.
No, I would try to stay away from fiat, because if you look at the recent appreciation in gold, I mean, as well as it's done in the dollar, it's hitting record highs against the euro, Canadian dollar, the Aussie dollar. So I don't think that trend, you know, absent the short-term drop that we're incurring right now, I don't think that trend is going to change. And so I honestly couldn't recommend any fiat currency. I'm not with Peter Schiff in that, but I'll put some money offshore. No, I would just go to the metals. They are currencies in and of themselves.
Okay.
Yeah, that's my 2 cents on that. So
hard money.
Hard money.
Hard
That's
money.
yeah. Hard assets are the only place to be. I mean, China and Russia. I've been saying since 2015, follow the smart money. Those guys have been loading up in gold and silver since 2008, at least. And they're not doing it because they think it's shiny and pretty. They're doing it for a reason. And it's insurance, yes, but what would cause the biggest appreciation in value of gold in particular, and of course silver and the miners?
Because you have to back currency.
The collapse in the dollar and fiat currencies in general. And he who has the gold rules. So I believe that that's the rationale, that they see the same things we see, the debt on the US books and so forth. And I keep coming back to this slide from Bridgewater and the CBO, because I think it's the most important graph. I haven't got the updated version, but this, where they show the debt to GDP, the total debt to GDP. We keep talking in terms of 105% and so forth, public debt to GDP. Back in 2016, and given the deficits that we've incurred since, this is probably a lot higher. It's over 1,000% of GDP. If you add everything up, the amount of debt in the US is over 1,000%. That's a banana republic.
The US only non-funded liabilities, I think, has something like 120 trillion maturing within this decade. I mean, it's nuts.
Yeah, that's the number under Social Security and Medicare right here. It's got the blue
nuts.
and it's nuts. So how are they going to pay for all this? Either they outright default. This is not rocket science. It's like, you're overdrawn on your credit card and you owe the bank on your mortgage. How do you pay for it? You either default or you go out and get another job and you pay it off. But the Fed has, the U.S. government has another option. They can literally print the currency to pay it back. And that's what they have always resorted to. I mean, I hear the talk of Jubilee and so forth. I don't see how the Chinese and the Japanese are going to agree to that, given that they're huge creditors. But it's always easier, and the silent method is just to inflate it away. And that is the option that governments and politicians have typically always chosen. And that's what I expect them to do now. I mean, that's what we see the central banks doing, for the past 30 years, but especially in the past 10. They're just printing the currencies into oblivion. I don't expect this to be any different. But I would like to, we're talking very high level here. I'd like to go back to the S&P and just quickly state, this is a massive move, and I do believe that the Fed is in control of the stock market. Economy is another thing, but the stock market. And that if they let this thing drop to 2,600, or even perhaps my original target, which was around 21 to 2,200, and then they come out and they start printing full-blown QE and double, triple their balance sheet, yes, they can drive this higher. But to your point, Steve, I mean, 6,000 on the S&P, what is that in real terms when you've just devalued the currency by 50%? I mean, it's, what, 3,000 again? What if you devalue it by 75%, then you're down to 1,500? My point is that, yes, they can pump the stock market higher. They can simply just turn on the printing presses, as Bernanke said back in 2002. But in real terms, where the money is to be made is going to be in gold and silver if that happens.
Do you think that this week's action, David, in the dollar is important for a cyclical, maybe secular turn, the reversal to the downside we had this week in the Dixie?
Well, let me answer a question with a question, which I hate, but it illustrates the point. Every jingoist in the U.S. has said that in the next crisis, the dollar is going to take off because capital will flow to the safest harbor, which will be the U.S., and the dollar will go higher. Now, maybe just short term, but at least initially, what does the dollar's fall at the same time as the S&P's dump tell you about the dollar's prospects? It tells me that everybody anticipates that the Fed is going to print. Okay. Because they have no choice. The only alternative is collapse. Because this is a Ponzi scheme. I mean, if they don't print, why would the stock market go up? To your point, Steve, you've got the coronavirus, which has shut down ports around the world. People have stopped spending. They're locked in their apartments, etc., etc. Why would the stock market go up? There is no reason. It wouldn't. There is no reason.
Especially from the disvaluations that we've. I mean, as I was saying earlier, this market wasn't priced to perfection. It was priced way beyond that, right?
Yeah, I was watching the Disney Channel for financial news. Yes.
Yeah.
So yeah, it just illustrates my point, which is that the only way this market goes up is if the central banks print it higher, and unless Trump is willing to throw in the towel, that's precisely what I believe they will do. Will they do it tomorrow? Not necessarily, but if they do it lower, and they've used this short squeeze strategy very effectively, and I'm not saying this is definitive. This is just one scenario. You could be right, and it collapses now. The depression has already started, and we don't even know it. But I'm not so sure. I think that we could see a drop to those levels, I point out, 2,600 or 2,100, and then the Fed comes back to town. And despite what others are saying, I believe they could print it higher. And I think that the dollar's weakness recently indicates that too, that's what the market expects. Ultimately.
Okay, interesting. All right.
So that's my principal view with regard to the...
You were talking, so really binary, you were talking about in a tweet. So basically, when you think about it, everything's gone up together, and really the only place that you had any cover this week were in treasuries. Gold, even gold is lower on the week. Some people saying margin calls. Silver is down $2 from the highs, so it really didn't serve its purpose as a hedge against risk off. So, and isn't it possible, David, that if China's problems continue to deepen, that they own gold from $800 lower.
Mm-hmm.
Couldn't they sell a little gold and then buy it back cheaper if they need to finance whatever they're going to do to bring their economy back?
Sure, but all evidence to this point suggests that they will do the opposite. That they will sell
keep buying it.
Sell their dollars and buying it as it goes down. Yeah, they take and other central banks too, including Russia in particular. Actually, whenever I talk about gold, I always have this one caveat that I always cite, that is the 2008 scenario, where gold fell 30% in 2008 from March until October. At the same time, the stock market dumped. Now, it did start to rally ahead, and I show the chart here. It did start to rally ahead of the bottom in the stock market because the gold investors anticipated QE, and there you have it. There's no reason not to expect the same scenario to play out if indeed gold keeps going down. One of the drivers of this, by the way, the drop in gold, was a spike in real yields. Now, back then, you didn't have the Fed coming out and saying that in the event that yields go higher, we are considering capping those yields, much like Japan has done, which Brainerd alluded to on the 21st. If you are capping yields, say at 2%, and they start printing and inflation starts going through the roof, per our earlier scenario, what happens to real yields? They dump. If you cap the nominal yield, it can't go any higher. You cap it at 2%. So you're printing all this money just to buy the debt and keep it at 2%. But meanwhile, inflation starts to take off because we've got MMT running in the background where you're flooding money into the economy. Real yields are capped and they fall. And there is an asymmetric risk to real yields. So sure, in the short term, you could see a 2008 scenario where gold and silver pull back. But for me, it's just a buying opportunity because unless the Fed and the politicians are willing to allow the world economy to collapse from this point forward, which I sincerely doubt, the only option they have is to print. And
if they can cap yields, are you saying they could prevent? Because I actually think the bond market's an even bigger bubble. It's a bigger market. That they could prevent a bear market on the long end of the curve, a big bear market where yields spike up on the long end.
Absolutely.
Starting to deepen a little bit. So they can't prevent a bear market in sovereigns, can they?
Yeah, yes, they can. Absolutely, they can. But Dale, let me finish that point. I'm not just going to leave that out there. David Brady says, that the Fed can cap yields, betray economic science. No, if they do, and they can, there's one casualty, and that casualty is the dollar. Like, they can print as many dollars as they want. As Steve mentioned earlier, and this is exactly the same scenario, the holders of those treasuries will get their money back, but it won't be worth squat because the dollar is being printed into oblivion. And that's what I mean by what's gold and silver worth when that happens. I'll pick a number with a number of zeros behind it.
So the big short is really the dollar. More than the stock market, more than the bond market, the big short is the dollar.
That's one way to put it. I would say the big long is precious metals. Yeah. But yes, and I've been on board myself, and the likes of Luke Roman have been saying this for years now. That I don't see any other way out. Honestly, I mean, even in a Jubilee situation, that is effectively a default. And the dollar is going to head south. In order for a global reserve currency, a supranational global reserve currency. I'm not putting on a tinfoil hat when I say this, but everything is pointing in that direction. They're all talking about digital central bank currencies, and there's going to be a digital one world currency. That's not going to be Fed coin. It's going to be the electronic SDR. It was built for that purpose. Well, in order for that to happen, the only way you're going to get the Americans to agree to it is the destruction of the dollar. If the dollar collapses, then of course they're going to agree to an international currency.
Yeah, because there's going to be pressure from citizens to get in on something more stable that will actually stabilize prices. Yes.
Exactly. That's the way. That's the mechanism to make this happen. Now, do I know the timing of this? No, but it's better to be early than late in preparing for it. And based on the most recent moves, I would suggest that it's coming sooner rather than later.
I've already bet a dinner with a friend of mine that the dollar is going to lose 30% during this decade. That was my assumption.
Well, I lived and worked in the United States for 17 years. I'm now in Toronto, Canada, and I moved every single dollar I have over into metals or Canadian dollars or a couple of other currencies, euros, as of last December. And I don't have any dollars on hand right now.
You moved back to civilization, David? Was it because of the baby? Because you were off the grid.
Yes. Well, there's 4 of them.
Wow. That's a change.
Yeah, there's 4 of them now.
Yeah. Okay. Is that why? Because I mean, you had the perfect setup for being able to not be in the middle of everything, and you moved back to a city.
Yeah. Well, I'm on the outskirts, but yes.
Yeah. Okay.
Still connected to civilization. Yes.
Okay. All right. Well, you're not Grizzly Adams anymore, so.
Well, actually, I have got my Grizzly Adams resort, if you want to put it that way. When everybody's dropping dead of coronavirus and the depression.
So it's still your haven, and you can get away and get there. So, yes. But that's interesting that you're back in the city. So, anything else that you want to cover? I mean, I really appreciate you coming in here and talking about what's been, really. I was bearish last Saturday, and talking to my guys, I thought 3,100 was ambitious. So even overshot my expectations. And I thought that would take till March or April. So really, these markets are now in a position where it's like an auto wreck, and they're in shock. And it's going to take some time for, trading to get back to kind of a normal rhythm, or maybe that rhythm is gone for a while.
Yeah, I think volatility is here to stay now that this has started, and the extent of the move in such a short period of time should tell you the importance of the Fed to the market. By simply saying that they're stepping back a little bit, look what happened.
Wile E. Coyote.
Exactly. Thank you. Best reference.
Yeah.
Yes.
I mean, standing on the shelf a week ago. Yes. On the rock, and it gave way this week. So okay.
Yeah, there's a warning I want to send out to your listeners in the short term. For me, in these volatile markets, and as dangerous as this is right now, we could go straight back up. Nobody knows what's going to happen in the very short term. But I would say this: it's a good time to just step aside and break out a bag of popcorn and just watch it. For me, I'm waiting to see what the Fed does. Specifically, I'm waiting to see them step back in and say, either we're going to full-blown QE, or we have to ramp. There's another repo crisis, which forces us to go back to the repo market and spend even more. Just watch their balance sheet. And once the Fed does that, that's, for me, the signal that it's game on again. And they're going to start pumping this thing like no tomorrow. I do believe that if they can do this one more time, it will be the last time that they pump it. It will be a blow-off top. And after that is the Great Depression. Now, that's just me talking. That's my humble opinion. Take it for what it is.
Yeah.
But this market
they have one more trick left in the bag.
Yes, they can throw the kitchen sink at this, but they sacrifice the dollar in the process. Right. And that is ultimately what leads to hyperinflation, and that ultimately leads to a deflationary collapse, which is the Great Depression 2.0. And I don't see any other way out. But in the short term, step to the side, watch what happens. And when they come in, if you want to take a shot at it, buy stocks, buy everything but the dollar, as I said back in 2017. But for me, the safest harbor of all to be in, and I've been buying since 2015, is gold, silver, the physical metals. Use the miners as a trade because there'll be spectacular gains on those when this bottoms.
Yeah, a very nicely leveraged trade in the miners. I mean, if gold explodes, they will explode times 5, times 10, some of them.
Yes, and I like silver even more so, Steve. I think silver is going to, gold always well, not always, but typically outperforms initially. But once the rally is established, silver catches up and then just passes gold by waves.
Silver is still. I mean, in
I'm
all the
showing
ratios.
the gold-silver ratio right here,
Yeah.
David. You see it?
No,
you're showing the screen. All right.
Yes.
Anyway, we'll wrap it.
Yeah. Silver has so much room to move to the upside. I mean, it was at 50 right before the.
There you go. New highs on the gold-silver ratio right there.
Yeah.
Yeah.
If you see it. So, would you put on this trade and start selling 1 ounce of gold to get 95 ounces of silver right here?
You could, or you could just wait for the Fed to show up and then do it. I mean, once the Fed comes in, that's the bottom for the metals as far as I'm concerned, and then silver will start to outpace gold. And actually, this chart's, if you look back at this chart for 2008 and what happened to the gold-silver ratio, I had it on my presentation. Gold-silver ratio fell all the way down to 30. So it's actually in the 20s.
Wow.
And so you could get a 4x move in silver relative to gold. On top of any appreciation in gold, say gold doubles or triples, silver is going to go up 4 times. 8, 24 times. And that's typically what's happened in the past. If you look at the 70s and you look at the 2000s, silver went up 36 times in the 70s. Gold went up 24. And silver outperformed gold in the 2000s as well. I expect the same and even more so next time around. Silver is still underperforming gold right now. When the rally is truly established, when the next wave 3 of 3 kicks in, it's just goodbye. It's going to the stratosphere.
David, I have one last question for you.
Yes.
There are a lot of people that are trying to convince investors that cryptocurrencies and especially Bitcoin is the new gold. Personally, I'm not buying it. I haven't even seen how they would perform through a single business cycle. So personally, I'm not buying that. I'm also in physical gold, and I'm going to remain there. But what do you think is going to happen to cryptocurrencies? Let's say Bitcoin, which is like the blue chip of cryptocurrencies, during such a period. Do you think since they're the most speculative instruments, can vanish, or do you think that they can actually benefit a lot?
If this was a free market, a capitalist world, which it most certainly is not, I would say cryptocurrencies, Bitcoin in particular, would do extraordinarily well. Unfortunately, I'm on Danielle DiMartino put out did an interview a little over a year ago on this, and I'm with her 100%. She said this basically: the monetary authorities around the world, the central banks and their backers, those who own, they're all private institutions, will not allow a competing monetary regime. You've got these central banks talking about central bank digital currencies right now. Lagarde's one of the biggest pioneers of it. And we've just talked earlier on about a potential digital global reserve currency. Do you think those central banks, those monetary authorities, are going to allow private
give up their monopoly?
Yes, to compete? No. They're going to crush it. How do they crush it? They don't allow it to be used for any business whatsoever. They tell all the banks to reject it. They tell all the corporations to reject it. You can't use it on Amazon. They tell every retailer in the world that if you touch this, we're going to crush you. We're going to indict you. So I'm with Danielle DiMartino. If this was a free market, I would say yes, it absolutely could probably exceed gold in terms of gains. But because of the world we live in today, very Orwellian overreach in every aspect, I expect them to not allow any competition to their own digital currencies when the time comes. And so, no, I don't think that's a viable alternative.
Okay,
Thank you so much, David, for dropping by, and let's not let as much time pass for a return. And I wish you and your family the best. Being back in Toronto, it's my hometown is Chicago, so you're in Chicago's sister city, and I really hope I get to meet you someday, David, and break bread with you. And
that'd be great.
I really appreciate you coming in and capping off a very historic week with a calm and insightful narrative for people to digest over the weekend. Thank you for edifying F.A.C.E today, David.
Dale, one last thing on that, because it's up to you to bring me back. I'll come on anytime, you know me.
All right.
But I'd also just one last comment. The takeaway is, I've said it multiple times during this interview. I mean, next time Steve can do the interview for me, because he and I seem to have exactly the same thought. But anyway, with regard to the Fed, just watch for when they go back in the opposite direction. Watch for the about turn. Watch for the 180. That'll be your signal. And if you want confirmation, wait to see a bottom in stocks, and stocks start to go back up after whatever the Fed says or does. And when that happens, don't worry about missing the bottom, because if they are going to throw the kitchen sink at this thing, which I believe they will, stocks could double. If we go down to 2100 or triple, the gold and silver just see you. It's like they're gone. You're talking silly numbers at that point. Just watch for the Fed 180, and that's the key.
Okay, buddy. Don't fight the Fed.
Don't fight the Fed. Just jump on the ride.
All right, buddy. Thank you so much, David. Have a great weekend.
Have a great weekend, David.
I appreciate you being here with us today.
Thank you for having me on, guys. Appreciate it.
Steve, thank you very much for conducting this interview. You could write the tagline.
Thank you, Dale.
Okay, because you were here, right? And everybody, thanks for hanging out with us this week. I hope no one got hurt. I hope maybe a few of you people listened to us and, we're long some VIX. I mean, I certainly didn't ride it to 39, but 28 wasn't a bad ride. And we'll see what happens next week. We're going to do our best to keep you guys safe and look for low risk, high probability setups. Don't forget to subscribe, and really you have a team that you can't find elsewhere, all in one location. So don't just count your pips, count your blessings, and we'll see everyone on Monday. Adios. Have a great weekend, Steve.
You too, Coach. You and everybody else.
Okay. Can you there, I could end the meeting. Okay, so that's it, everyone. Enjoy, and watch all the Sunday talk shows, and keep Valium nearby. And I'll talk to you later on. Adios.